This next one is what everybody looks forward to at Honeybadger every year, which is the last panel, and it's titled What's Next? We have a killer group of people coming up here. We got Willy Woo, we got Adam back, we got Max Kai, we got Danny from What Bitcoin Did, and we have Leon Wankum coming up. So gentlemen, join the stage, take it away. Look, wow, this chair got set up pretty quick. Hope you guys enjoy this one.
Brought a beer, is that bad? Get in here. All right, what's next? So, I've got an amazing group of panelists here. I think probably the best place to start is Paper Bitcoin Summer. It's all anyone talks about now. I'm basically a Bitcoin Treasury podcast at this point. And Adam, I think we should start with you. You've been working in this space, an absolute legend in Bitcoin, working on with the cypherpunks since way before Bitcoin even existed. Bitcoin came into the world as freedom money, and now we have Paper Bitcoin Summer. Is this what winning looks like?
Well, I think if you have good hard money, then all types of people will use it for lots of reasons. And there are many Bitcoin startups that have been around for 3 years, 5 years, 10 years, who had Bitcoin treasuries for a long time now, right? So what you're seeing is a public version of that. So MicroStrategy. Now, when first MicroStrategy bought Bitcoin, it was with the thesis that they had dollars and they were inflating away his melting ice cube that Saylor talks about, right? And so effectively, it started out as inflation hedge. And so, for me, I thought that's a good initiative. If other companies would do that, they would benefit from protecting themselves from inflation. And Bitcoin is a type of asset that companies can own as a treasury asset. So I figured, let's support him. And, if some Bitcoiners buy a few of his shares, collectively, we can maybe help defend him if Wall Street doesn't like what he's doing and punishes the shares because he's bought Bitcoin. And so I think that kind of was early in the phase of Bitcoiners starting to trade and invest in treasury companies. And of course that, it took a few years before any other treasury companies emerged. Metaplanet is the next one, and now there are many more. And so, yeah, I think it's an implication that as Bitcoin gets wider adoption, it's going to get adopted where it's logical to adopt it. And I think a logical place to adopt it is in companies. And one way to think about that is something I said recently, is that Bitcoin is the hurdle rate, which is to say, if you're an investor, it means, if you can't beat the hurdle rate, typically that means the risk-free rate from US dollars or British pounds or whatever it is from a government bond, then it's a pretty shitty investment and you should stop what you're doing, right? So if Bitcoin is a hurdle rate, that means if you can't beat Bitcoin, you should close up shop and buy Bitcoin, right? So the only way for a company to make any sense, if you accept that viewpoint, is what a company better, reconfigure itself around Bitcoin. So a treasury company is an example of that, but it doesn't have to be a pure play. It could be a company with a core business as well.
I think the treasury companies that are going to crop up with a real core business are going to be pretty interesting. But one thing that I've always been skeptical of, and I get accused of mid-curving this all the time, and I can believe it. But do you think these things are going to be good for Bitcoin long term? And when I talk about treasury companies, I think it's almost worth taking strategy out of it. They're huge. They're clearly, I think they're going to be around for a long time. I think Metaplanet being in this kind of siloed Japanese market, again, they're going to do well. And I think anyone doing this with reasonable size has a good chance at surviving long term. It's the long tail that I have kind of the concerns around. So maybe we can go down the line and just, are these treasury companies going to be good for Bitcoin?
Yes, that's the short answer. And to give you a long answer, I think that, and obviously agreeing with what Adam said, the adoption of Bitcoin is happening through rational economic means. And Bitcoin is being adopted in the less industrialized world as a means of payment, but in the industrialized world, it's being adopted as collateral because there's no better alternative. Real estate, it has been used as money, but actually it's a monetary substitute by default, not by design. Bonds don't make any sense, gold is outdated, and stocks are overvalued. So I think it's just a rational and economically sound decision to use Bitcoin as collateral.
Everything is good for Bitcoin. I mean, and treasury companies are also kind of good. They might cause the next bubble burst, like beer cycle, but I guess it could be very simple logic. Treasury companies, they first gonna hold Bitcoin in custody with someone else, like Coinbase at this point, probably the biggest custodian. Then they're going to learn how to self-custody. Then they're going to do self-custody. Then there's individuals within these companies who are going to learn about that. And then effectively, it's just going to spreading out massively. And we've been talking about this yesterday, that as soon as strategy gets into S&P 500, there will be instantly hundreds of millions of people across the globe exposed to Bitcoin in one or in another way.
It's a double-edged sword, right? When you concentrate the supply, it can get rugged. I think we were on stage earlier in the week talking about the risk of MicroStrategy and other Bitcoin treasury companies being nationalized and repeating the cycle of gold is money backed by, money backed by gold, and then you close it and it becomes fiat. And so that risk is there. But then we as Bitcoiners here got into it for the most part for the freedom and the value and the sovereignty it adds and the ability to change the world. And the thing is, we don't get to change the world unless this monetary asset, in my opinion, the perfect asset for the next thousands of years, does not get to do its job unless the capital flows in and it gets big enough to rival the US dollar, the gold, and so forth. And there's a lot of actors here in the world with the money bags. They cannot allocate to Bitcoin. If you're a pension fund, or what, are you going to self-custody? Okay, so do I need to build a Coinbase custody so that is safe? It's not going to happen, but I can buy an ETF, I can buy MicroStrategy. That's how the floodgates open, and these are on-ramps. With the on-ramps comes risk. The risk of being rugged at a nation-state level, the risk of a bubble bursting, all the debt structuring is all different with these treasury companies, and we don't have a very good idea. No one's really publicly look deeply into the debt structuring. So I absolutely think the weak ones will blow up and people are going to lose a lot of money. We now have the altcoin, shitcoin treasuries practicing the playbook. It's going to create another bubble, and this stuff will shake itself out as every cycle does, and we'll learn. But the on-ramps are important, and we like to think everyone should self-custody. That's not going to happen at an institutional level. It's too difficult, too slow. So being practical, these on-ramps need to be built.
So, Willy, you're obviously a markets guy. And one of the things that I have some concern around with the treasury companies is the fact that I think they're going to just be hoovering up coins in the bull market, and then what happens in the bear market, who's swimming naked, and how many coins get spat back out into the market. Do you think, and also for a long time, like in early days of this bull market, I was looking at it and I was thinking, I can't see the thing that blows up and makes this bubble burst right now. And the longer we go, the more treasury companies get added, the more it looks likely that that's going to play some role in this. Do you think they are going to either create or exacerbate the next bear market that we have?
It will have its impact. Whether or not it's going to be the major impact, I don't actually think it is the major impact. I think that we are subject now in Bitcoin land, being this new multi-trillion-dollar asset, first time in this cycle, to really cement that. It's the new it's the new global macro asset that's being traded, first one in 150 years, and we are subject to global macro and the economy of the world, and I think that that's going to be the biggest teller. If liquidity, meaning money being printed, the money circulating, dries up, that's going to be the biggest part, and then it's going to stress test all parts of this ecosystem, and the weak treasury companies will have its little blow-ups. I think the main thing is the dire situation of the global economy and where we are in that cycle.
Leon, do you think any of these companies are going to be able to compete with someone like Strategy, or is this going to end up being, I'm going to come to you here, Adam, as well, because obviously you're launching your own, but do you think this is almost a winner-takes-all market?
It's a very interesting question. I just had a conversation with a friend about it, and I do believe that you need to hit escape velocity, so to say, to be able to issue preferreds. Otherwise, you won't be able to sustain a bear market, because once the stock trades below MNAV and you don't have the ability to issue preferreds, for example, you'll have a problem, basically. So I do believe that within the treasury company space, there are differences, of course, between the individual companies. And Strategy and MetaPlanet are the most obvious cases of companies that actually found business models, because they do provide the ability to generate income that beats all the other opportunities in the market. And that is because the increase in purchasing power of Bitcoin, also by the new FASB accounting standards, is counted as income. So now then the question we have to ask ourselves is, are there other companies that are able, through cash flow, to outperform the income that Bitcoin treasury companies would generate simply by holding Bitcoin? And I think that's going to be very, very difficult. But you need to have a treasury and the size of a company that is big enough, in order to manage the bear market well. Because also Strategy dropped below 1 MNAV in the next bear market, in the last bear market. So I think we can expect the price to move upwards, and once that happens, we'll see what companies will be able to survive the bear market. It's hard to say, of course.
It is. Adam, I do want to go to you with this one, though, because you're launching your treasury play with around 30,000 coins. Is that right? Obviously, I'm sure you have it in your sights to go after Sailor. How do you plan on trying to catch Sailor, who's at 660,000 or whatever he's at?
Well, I mean, I think ultimately the thing that matters for, I mean, the North Star metric for any treasury company is the Bitcoin per share, and that increasing over time. So in a lot of ways, you don't individually care which company is bigger, you care which one performs better in terms of Bitcoin per share. So that's one thing. And then different companies are doing different strategies. So BSTR, Bitcoin Standard Treasury, which is the company that I co-founded, is, it's in the process of doing a SPAC merger. So we're waiting for regulator approval later in the year. And that we are more active. So we will do low-risk Bitcoin yield, we'll do Bitcoin alpha strategies, we'll engage in hedging, and we have Sean Bill as the CIO, who's a very experienced hedge fund manager with a good career track record, and personal experience with trading Bitcoin, and actually was the manager for a period of the first US public pension fund to put Bitcoin on the balance sheet. So he's got some history with Bitcoin and some history with being, a steady pair of hands in managing large amounts of, pension fund money and institutional money in hedge funds. So we think we can, do something more active and do it prudently, and that can be a factor in the picture. And we have some more, more ideas. And I think the other thing that is different about BSTR is that it's primarily a Bitcoin, it's bringing Bitcoin to Wall Street. It's bringing Bitcoin to the market. It's the SPAC, SIPO, is a NASDAQ-listed company, but about 2/3 of the money that is going into it is actually Bitcoin. So Bitcoin from the founding company, and 5,000 Bitcoin, 5,021 Bitcoin from a range of individual Bitcoin holders internationally and in the US, and some funds actually that also invested into this Bitcoin pipe, which was the first of its type. So a pipe, for people who don't know, is just a way for people to invest in stock that later becomes public. So private investment for public equity. And typically, and we had a dollar-based, so a normal pipe as well, where people invested dollars. We also brought the first Bitcoin-denominated pipe, so people were able to invest Bitcoin and roll it into, eventually, at the business merger at the end, into BSTR shares. And they could do that potentially as US taxpayers without incurring a deemed sale on the Bitcoin in. So that's a kind of interesting and new instrument in the market. So all to say that I think we have a different approach, and we are bringing with us into the public market Bitcoin traders, so active Bitcoin traders, people from that kind of background, so that, you know, a lot of the Bitcoin treasury companies that went through the SPAC or the RTO route in the US essentially were coming to Wall Street, raising some money to buy some Bitcoin, then borrowing some money using convertible notes, and then they're finished, right? Now they have to market it. Whereas we're coming with more substance. We're coming with a lot of Bitcoin. We're bringing more Bitcoiners with us. We're being more active. So I think it's a quite different play to MicroStrategy. And then, of course, there are differences between countries. So MetaPlanet has been raised, and I've been a person individually who's invested in MetaPlanet over the years. I think it's an interesting play, but it's, you know, it's a bit specific to Japan, to some tax situations there. It's a different market with a very active retail trading environment. There's a lot of leverage in the Japanese market. There are limit down and limit up as part of the Tokyo Stock Exchange mechanics, and all of these things combine to make the effect.
Adam, can I ask you a question? That I don't want this to come across as rude. I really don't mean that. But there's probably no one that understands Bitcoin as freedom money more than you. Like, you've been working on this kind of thing for your entire career. Like, why do you care about treasury companies? Is that what Bitcoin was for?
I think Bitcoin is going to be adopted by all parts of the economy, from the individual, where you have unseizable bearer money, which is, you know, the early cypherpunk ideas about sort of self-sovereignty and so on, but also by companies. And you've got to bear in mind that many of the cypherpunks, I mean, the cypherpunks had views all over the map, right? They just happened to agree on, like, privacy, hard money, bearer, eCash, that kind of thing. But otherwise, they had lots of different ideas. But a lot of them were interested, and myself included, in anarcho-capitalism, like extreme free market, but organized as companies and corporations as they, you know, it's a very big part of the global economy and why the world is as wealthy as it is today, which is the introduction of the concept of a company, organizing a company by shares to attract investment, to build products and services, to have efficient ways to raise capital, is a big part of why the world is prosperous today. And so, you know, Bitcoin is ultimately, you know, going to form part of that. And what we've seen with Michael Saylor is he's kind of shown the way for companies to start incorporating Bitcoin. And I would say that, as, in my view, Bitcoin is effectively the hurdle rate. You know, so as Willy said, that, you know, Bitcoin is very important for the future, that inevitably companies have to adopt Bitcoin. Otherwise, they're going to get left behind, and nobody's going to invest in them because they're going to buy Bitcoin instead. Because if you can't outperform Bitcoin, why should anybody invest in you, other than kind of short-term, you know, in volatility reduction reasons?
So, Max, one of the kind of touted risks out there about these treasury companies is that they become a centralization issue for Bitcoin. Saylor, presumably at some point, is going to get to 1 million coins. He's over halfway there already. Do you see that as a big issue?
Of course, I see that as a big issue. I think, like, a lot of sovereign individuals see that as a big issue, but I mean, it's also inevitable in a way. And the good thing about Bitcoin is that even your enemies can use that. And I mean, even the things that you don't like is going to happen. So it's just going to happen, and we just need to play along with it. And that's just a part of evolution. There will be institutions, there will be states that will be holding Bitcoin reserves, and not necessarily we all will be fans of these states. I mean, it's just going to happen. I do think that putting a lot of Bitcoin in one single hand, under one single custody, is a huge risk. But then again, maybe it's not a question to MicroStrategy holding a lot of Bitcoin. It's more of a question how they're doing that custody. I think that we should be concerned more about large custodians such as Coinbase, because effectively they're becoming a honeypots, and they just concentrate a lot of Bitcoin inside.
Yeah, I totally agree. And Leon, do you think there's also, like, that's the centralization risk for Bitcoin, but on kind of a different scale, do you think there's a nationalization risk where one day the US government turn up at Coinbase doors and says, my Bitcoin now?
Potentially, I'll answer your question. I just want to make a comment on your previous question.
Please do.
Yeah, because I think what's interesting is that Bitcoin changed the time value of money, meaning that if you hold Bitcoin over time, you have more optionality. So being a Bitcoin treasury company in its essence means hodling Bitcoin, which gives you optionality over time. And I think what is interesting about strategy, there are different use cases for different jurisdictions, but strategy does produce cash flow. So they do have an operating business, and Metaplanet in a sense as well, because they have a put.
Sorry, I just want to interrupt very briefly. Like, they do have an operating business, but does the operating business even matter anymore?
Not necessarily, but in the last bear market I did, because it increased the creditworthiness of the company, and it allows the company, like an insurer, to refinance in the worst case scenario. And coming from real estate and working with 70 to 90% leverage all the time, when I do look at Metaplanet, for example, their leverage is usually between 0.1 to 2% of the collateral value, of the Bitcoin value, and that's very little. So for me, it's actually interesting. I look at it and I think, wow, there's little risk in it when we talk about the leverage. I'm not talking about there's a custodian risk in it, it's huge, and there's also the risk of nationalization of the coins, for sure. That's probably the biggest risk. But then the question becomes, when will that happen? And within that time frame, what will be the move of that company? If you're an investor, you have to decide what's the opportunity cost, not doing it and giving up on the increase in the stock, if I want to invest into the stock, or thinking it's like a very serious issue. I do believe it's the issue that we have to take very serious, but I do not believe that it will become an issue within, I'd say, this legislational period, of course.
Okay, Leon, I do want to come back to the real estate thing because that's interesting. But Adam, just quickly, have you said how you're going to custody your coins yet? Will it still have to be at one of these like Anchorage, Coinbase type people, or will you be able to self-custody the Bitcoin?
We've not said how we're going to custody the coins. There might be like audit. As a public company, you have to have audits, and the auditors will have opinions about correct custody of coins. And I believe in a lot of cases in traditional finance, there's an argument for independence of custody. So particularly in like E-Trade or any kind of share trading platform, they have an independent custodian even to hold the shares, and that's to protect the interests of the traders on that platform. So, we'll have to navigate that. But ultimately, I do agree that there should be more distribution of custody. So I think in the case of MicroStrategy, I believe that's actually a mixture between Fidelity and Coinbase. I'm not sure if that's officially documented, but Arkham Intelligence, I think, published something to say that was what they could find. So now, I think the reason that Coinbase has a lot of coins is actually a bit of a historical accident, is probably likely to change, which is in prior years before the spot ETFs were introduced in the US, the people applying for them were submitting their ETF applications and getting back rejection letters, and they're all public, so they were looking at each other's rejection letters, and as soon as somebody got, didn't get a rejection on the custody point, they all copied what the first one that didn't get a rejection, and that happened to be Coinbase. I think that if there was another custodian, there will be another custodian, and the regulations in the US have improved to allow the big custodian banks to custody Bitcoin. So I think they're now clear to do that, but they're not set up for it. They don't have the technology. So either they build up the technology or they acquire a technology provider with custody experience, and then quite probably the ETFs will switch to something like that or diversify across custodians, which would be a healthier situation. Something else to say about custody is you can see that what Capital B did in France is quite interesting, which they do have an operating business, a software company, which initially was quite a significant part of the enterprise value. And they actually made a Luxembourg subsidiary. It's a French company that made a Luxembourg subsidiary to be the legal entity holding the coins with a custodian, with a point that there's some special types of structures in Luxembourg which are bankruptcy remote. So the point is, if the software company gets sued to an enormous degree for some kind of software accident, the French courts wouldn't be able to touch the coins because they're in a bankruptcy remote, quite robust, well-tested type of vehicle. So that's an interesting approach to kind of isolate the operating business risk from the Bitcoin on a shareholder's behalf.
It's funny, like I completely understand why you're saying maybe we'll move away from Coinbase to banks custody in Bitcoin. And I know that your hands are tied from a regulatory standpoint when you're doing things like this in the US, but it seems like the Bitcoin tools built by Bitcoiners already exist that these companies could be using. Like I'm thinking of things like Anchorwatch that allow you to have collaborative custody plus insurance on coins. And I've been surprised that no one's moved to that model yet. Is that just like a regulatory thing?
Well, it's not the approach that custodians take, but there's actually, I mean, to my mind, no logical reason why the custodians shouldn't share custody with the person they're, with the company or the individual they're custodying on behalf of, so that, that would provide you with an interesting protection that, it reduces your need to trust the custodian, in fact, because you're kind of, protecting yourself against a mistake or bad practice by the custodian as well. So I do think there's a future for sort of multi-sig collaborative custody, even in ETFs, where, as an ETF holder, shouldn't you be able to, make a request to withdraw your coins from the custodian and maybe even have a key enabling you to do that in a permissionless way, after a period of time to kind of unilaterally withdraw your coins from the ETF. I mean, that's what the technology enables. So maybe we'll get there in terms of deployed practice and people figuring out how to do that in a regulatory way.
All right, that's 25 minutes nearly on Bitcoin treasury companies. I think we need to implement a swear jar now, where if we say Bitcoin treasury company, you got to put some money in. Willy, can we talk a little bit about the market? This is obviously where you kind of specialize. With things like the treasury companies, swear jar, and ETFs and the institutional adoption of Bitcoin, how have you seen that change?
I think it's pretty obvious in the price chart where we don't have these sort of really large moves. It seems very, very staged. If you look at the liquidity flows that are coming in to the network, it's very steady. If you measure the amount of billions per day that's coming into the network, I've never seen it so smooth. Usually it's jaggy, there's someone that buys and it's outsized, and so it's bumpy and it's really smooth, like someone took some sandpaper and smoothed off the chart. And so I think that's the footprint of institutions. I think also, obviously, OG Bitcoiners that understand Bitcoin are the first to invest in the institutions, rotating their Bitcoin, selling it on the market, sometimes bringing it straight into these treasury companies. So, there's capital rotation out and then back in, and then it's being staged back in a orderly sort of dollar cost averagey way. Not seeing much in the way of retail moving the price. Also, we're 10x bigger. So what was $100,000 is now $1 million to be the equivalent to have the impact on price. So realistically, I think we're now in the age of the institutions where the really big floodgates lie, and that's what's going to move the price. It's how much of this $900 trillion of wealth assets comes into this $2 trillion bucket. And that's the game is regulatory compliance, not without, good thought and practice, because there are a lot of risks, and you need to diversify out of that risk. These are the, school of hard knocks. We've seen bad regulation, but the core of the regulation is don't let that dude in this institution screw it up and lose all of the money that you're acting as a fiduciary for. And so it's going to take some time. This capital is going to come in slowly. It's very deliberate. It's very intentional. And these people need to be very, very comfortable before the deployment happens.
Yeah, I mean, I think one of the things about the treasury companies, is that interesting comment. Well, so what the price regime that Willy's talking about is partly that, when you get new investors into Bitcoin, how much of a money multiplier that applies depends on how sticky they are as an investor, or if they're a good investor. So, if somebody comes in who's not accustomed with investing, or they're investing using credit or something inadvisable, then they're likely to panic sell on a price wobble. And So then that would have a small money multiplier effect, or maybe be net negative if they're more easy to shake than the average prior investor. But on the other hand, if you have a steady hands investor that invests and holds for years, that has a bigger effect on the money multiplier. And effectively what you've seen with the ETFs is they're stickier. So Eric Backelnaus, who's an ETF commentator, was saying that the ETF buyers are surprisingly sticky. They're not day trading. They're investing for a multi-year period on average. I think about a third of it is claimed to be institutional. Of course, you don't have perfect visibility into that. And then the other factor is the treasury companies, and I think they are potentially even stickier because they are buying Bitcoin and there's some elasticity in the price of the treasury company. So if you get into a bear market or some treasury companies make some missteps, their share price gets punished, but it's insulating Bitcoin. So Pierre Rochard was describing it that the treasury companies are effectively a shock absorber for the Bitcoin price. Their share price gets compressed, but it doesn't translate into a market trade affecting the Bitcoin price directly, right? So that's a new phenomena and interesting. And of course, the treasury companies are, bringing different types of money into Bitcoin that wasn't previously buying Bitcoin for various reasons. So it is providing new money into the system. And so we'll have to see what the net effect is, but I think it could, see reduced volatility and maybe affect the market cycle in terms of, whether diminishing returns actually turns out to be the case, or if we break free of that concept in this cycle or the next.
I think you owe me £6 after that, Adam. Do you think this dampens volatility, both the downside and the upside, though, as we have like these big institutions coming in and hedging their bets on the treasury companies with spot Bitcoin?
Well, I think it might. It's hard to say. I mean, I think it might dampen downside volatility, but if diminishing returns is broken, the diminishing return theory is that Bitcoin will go up by a smaller amount in each halving period, and that's just based on prior observation. There aren't that many samples, and different pricing model theories, which are just theories, right? They can get invalidated. So some things have clearly changed about the inputs in this cycle with, different types of investors. And, an alternative theory is that, technology adoption S-curves sometimes get steeper. And unlike with technology curves like internet adoption, early smartphone adoption, you can buy more Bitcoin. And so generally, people who start buying Bitcoin start conservatively, and then they get more conviction from seeing other people buying Bitcoin. So they end up buying more at higher prices. And so I think that's an additional network effect compared to what you get with other adoption curves. And other adoption curves themselves already undergo kind of mass adoption cycles as the network effect gets bigger, like internet use, mobile phones. So I don't know, maybe the diminishing return theory will get invalidated sometime.
I can see the YouTube thumbnail of Adam Back Supercycle already. Max, what do you think about the typical 4-year cycle? Do you think we may be out of that?
Well, we're yet to see about that, but we'll see. But I think, yes, it's changing, definitely. And even this bull cycle, you see that it's like many people say it's institutional bull market, basically. You don't have many friends or former colleagues calling you, asking you about Bitcoin as it was previously. Yet the price is growing. And if you look at the mempool, it's like there's it's almost empty. So I guess so, but 4 years is still something that a lot of people bet on. We'll see about that, but I guess it's only logical also that everything gets, life gets faster and technology gets faster, and the adoption curve of Bitcoin, if you will compare it with the adoption curve of internet, for example, is way more faster. And I guess we might end up with this cycles will be a bit shorter, or it's going to stay 4 years. I don't know.
Leon, I do want to ask you about the real estate. I'm not forgotten. But just quickly, Willy, we were speaking on the podcast yesterday, and I basically asked the same question that Max just brought up there, which is, we're in this bull market, but mempools are basically empty. And I don't remember that really happening before, certainly in the time I've been in Bitcoin. And you had a pretty good answer for that. Do you want to explain why you think the mempools are empty and how liquidity is increasing even though transactions aren't?
Yeah, so what's powering Bitcoin's price is liquidity, essentially the capital coming into the network on a longer time frame, not, daily or hourly. Look, if Michael Saylor's going to buy $5 billion, let's say, of Bitcoin, that's one transaction on the mempool. That's it. We've gone past the retail phase that, a whole bunch of people, 1,000 people, rushed in, 10,000 people rushed in. That's all individual transactions. Now it's much more in terms of an aggregator on the equities and then bringing in to just one transaction, and that could be $5 billion. And that's a simple explanation, I would say. Price moves on liquidity, not transactions on the mempool.
I mean, I think there's some additional factors. I agree with that, obviously, but I think the infrastructure used by the exchanges is changing. So at least the institutional buyers will take custody. So if the coins are ultimately bought on exchange, they'll take them off chain and store them in a custodian. And so that will be an on-chain transaction. Unfortunately, a lot of retail traders use the exchange as a custodian, so you never see their transactions. And for the kind of hedge funds and larger traders who would do cross-exchange things and move coins between exchanges, the infrastructure has changed a bit, and so there are more kind of equivalent of a prime brokerage, so that people are starting to use trilateral agreement, they're starting to use a custodian to hold their coins, and then, using an IOU on the exchanges, so they're able to move funds logically between exchanges without doing an on-chain transaction. So that could be a factor too. And then for Bitcoin itself, technologically, there is more layer 2 action, like Lightning, Liquid, and the Liquid Lightning wallets that are rebalancing Lightning channel, on-chain Lightning channels with Liquid so that they can recycle and use liquidity in Lightning channels more effectively. So those types of things are reducing on-chain activity for trading and retail, and payment use cases for Bitcoin.
And we've even got ARC here now, I believe. I think all the vendors here are using ARC. Is that right?
Yeah, we basically the first conference that tested ARC. So we're really happy about that, and that's great technology, very promising.
Well, the beer I'm drinking proves it works. So, Leon, just to get back to the real estate thing, as Bitcoiners, we always talk about the things that Bitcoin is going to demonetize: gold, real estate, treasuries, art, collectibles, all these things. And Bitcoin's over $2 trillion. It seems big, but in the grand scheme of things, it's still quite tiny. How quickly do you think it can start to demonetize these assets in a real way?
I don't know about the speed, but I do believe that the emergence of Bitcoin treasury companies does play into the demonetization of real estate, because I've been involved in around 100,000 square meters of construction over the past decade, and most of the assets that I've personally sold, they were either sold to pension funds that seek the higher yield than negative interest rates in the bank accounts, or high net worth individuals that were looking for cash flow. And for these individuals, owning a fixed income product or Bitcoin-backed security has less headache and more liquidity. So especially Strike and STRC do offer real estate-like features, because Strike, which is a preferred by strategy, has both an upside, because you can convert 10 strikes into one common MSTR share if MSTR hits $1,000. And you have a yield that you receive, which is higher than the average yield you receive in real estate, excluding leverage, but also excluding the headache. And then in STRC, you have a yield that is around 9% on every dollar invested, and you have more liquidity. So this was something I personally didn't see coming. And I find it interesting because the speculative attack is in full effect. Bitcoin is repricing risk, yield, and opportunity cost, and it's happening around Bitcoin as collateral. So I didn't see that coming. So the speculative attack that is unfolding right now, it's not necessarily unfolding by people leveraging the existing assets that they own in the fiat system, but it's companies that leverage Bitcoin as collateral. And it's quite interesting, I think.
So if you truly understand Bitcoin and you understand these products that MicroStrategy, or Strategy, sorry, are offering, is there any reason to ever invest in real estate at this point?
To be very honest with you, no. I mean, this comes from a real estate developer, and this might sound strange, right? But I think real estate investing since 2019, as we've known it, doesn't make sense anymore. Real estate development and the building culture, that's a different thing, right? And that's going to be positively affected by Bitcoin. But real estate investing, as we've known it, doesn't make sense anymore.
I want to get back into the treasury companies. I'm sorry, this swear jar is going to be full. But Adam, what is the size of the demand for these new preferreds by Strategy? Because to be fair, when I say I've been kind of skeptical, neutral, a bit bored by a lot of the treasury companies, the idea of just like selling common stock equity to buy Bitcoin is fine. And I don't think it's that much more interesting than that. But the preferreds now seem really interesting, and they're tapping into a totally different market.
Yeah, I mean, I think the whole phenomena is all about an arbitrage of the mispricing of Bitcoin versus the addressable market of demonetizing all of the types of assets with monetary premium. And that is, Willy said 900 trillion, Hal Finney said 200 trillion 3 days after the network started. We don't know where it is. There's been inflation since Hal Finney said that. But ultimately, everybody buying Bitcoin is arbitraging that phenomena, and the treasury companies are arbitraging that phenomena, and the preferreds are yet another arbitrage. The interesting thing about the preferreds is they are transforming the risk profile of Bitcoin to provide something simpler to digest for different types of fixed income or individual buyers. And the other interesting thing about the Stretch, and I think some of the other MicroStrategy preferreds, is they have ATMs on top of them. So when they place more capital, they don't have to work with an investment banker to find people to buy it. They just sell more into the market until they see that they're pushing the price, and then they slow down. And so that gives them a sort of more repeatable form. And I think, it took MicroStrategy a few years to work from the bonds to the convertible notes to the preferreds. And the first three preferreds, the different types, the Strike, the Strife, the Stride, they sold in moderate numbers, but Stretch, or STRC, sold 2.5 billion on its first try, right? So I think that one is now the one that presumably they're going to focus on. So that's very interesting to see, because that type of return and risk profile is very attractive versus treasury bonds, real estate, REIT investments, all kinds of investments really. And yet it's ultimately driven by the same Bitcoin arbitrage. So you could see this arbitrage flowing through and, refactoring the entire financial framework of companies and pension funds, even government bonds. And, if you have the better capital, it's just inevitable, right? Because anybody who doesn't make use of that is losing purchasing power. They're suffering from capital reallocation. And so, it all comes back to people are buying at the price they deserve, but now they are sort of indirectly benefiting or indirectly helping the arbitrage by buying transformed versions of, this arbitrage benefit. It's all, of course, predicated on Bitcoin's price going up as it undergoes adoption. But, for anybody who thinks that the addressable market for Bitcoin is that large, this is a very scalable arbitrage, because it's so huge. It could absorb, the cash treasuries of Apple and Microsoft and Berkshire Hathaway, and, not make a dent, basically. So I think it's going to take a few decades to work through this arbitrage.
All right, so this panel's called What's Next? And at the same time that Bitcoin is winning on so many fronts, price is ripping, we're infiltrating the capital markets with Bitcoin treasury companies, there's seemingly good regulation being pushed by at least some countries. We have software developers who are now facing prison. So we have Roman Storm, who has just been found guilty of one of the charges, and Keone and Bill, the Samurai devs, did a plea deal, so they're going to face up to 5 years. Likely going to be the higher end of that, from what I've heard. Max, this isn't winning. How much of a threat do you think this is for Bitcoin?
Well, government was always a threat for Bitcoin, so it's only logical. But I agree with you. This isn't winning in a way that I mean, price good, institutional adoption is very good, and everything else is very good. But the privacy issue is still very important. And I guess one of the core pillars of Bitcoin was always about privacy. And I think that a lot of people actually changed their mind, ignoring the privacy and being happy about price, which is fine. Again, it's a free market and hopefully free countries that we're in, and you can change your opinion. But on the privacy front, I guess we're getting at the point where we might have a separation of certain parts of Bitcoin community, where one part will be willing to fight for privacy, and another part will be, probably majority of the people will be just fine with what it is as it is. But I guess some of the regulation and some of the frameworks and laws are pretty concerning, even with the new administration and even with the new, more Bitcoin-friendly laws.
Yeah, I mean, it's actually surprising that the U.S. courts, continued the trajectory you described with those two cases, because they had made some announcements that they were going to, consider open source developers of non-custodial products to be not liable for the uses, right? And yet they proceeded with those cases, so it's inconsistent.
It's very inconsistent. And I'm sorry to interrupt, but I just wanted to add to that. Is this not a fight that you and the people you work with and have worked with for a long time have already fought in the early 90s?
Yeah, I mean, it is kind of annoying to see governments repeatedly float lead balloons, like just crazy dystopian what-ifs, just to see how the public reacts, and then actually acting on some of them. So of course you live in the UK, I presume, and there's some pretty silly things going on there with jailing people for social media. Oh, good on you. Myself many years ago but nevertheless, like, these things are continuing, and unfortunately, some of the things that are being done in Europe, the over-regulation, stifling innovation, in effect, and I think also the attraction to CDBCs you see from regulators in, developed countries is kind of shocking as well, because in the way they describe them, you can clearly see the envy for the Chinese credit, social credit score, where you can demonetize people, you can kind of block their access to finance, and this is all extremely dystopian. So I just don't think most of these things are remotely compatible with a free society. So I just I don't know, like, people just have to say no to this nonsense, really. I mean, if regulators propose something insane and the compliance level is 0%, it doesn't mean anything, right? They can't put everybody in jail, and some of the things they're saying are just insane, if you ask me.
I want to ask you a hard question, Adam. So I was speaking to Callie, shout out Callie, he's amazing. And we were in a taxi the other day, and I said to him, we were talking about eCash, and I asked him the question of, if eCash had have worked, had have proliferated, would that have been worth not having Bitcoin? So if we had had 3+ decades of financial privacy, no threat of CBDCs, none of the baggage that comes with fiat, apart from the debasement, do you think that could have been worth it?
Well, I mean, I think the original electronic cash protocols, like the DigiCash one in the mid-90s, was in effect a stablecoin, but with strong privacy, bearer, but very cashew-like properties, which you had to trust the central issuer to some extent. And of course, because it's a stablecoin, that central issuer had to have banking relationships to transfer money in and out. So, it's a little tricky to see how you can have a stablecoin that doesn't have that ties where, the backing currency could be seized and all this kind of problem. But I do think that, it's a big part of the interest for Bitcoin and a lot of the fundamental value is the unseizability and the bearer properties, right? So, it's just Bitcoin went further and faster, I think. Well, the DigiCash thing failed for other reasons, but I think Bitcoin went further and faster because it has both. It has the permissionlessness, the bearer aspect. You just set up a wallet, install software, and you're good to go. And also is a hard money, right? So that was not a given. Like some of those previous eCash systems were not hard monies. So I think the combination is better, let's say.
All right, we're under 5 minutes left, and I've got a few things I want to talk about, but one of them is quantum. Oh, boy. Well, I don't know who to start with here. Maybe we go down the line. What kind of threat do you think quantum realistically poses, and do you think Bitcoin will be able to overcome that threat relatively easily?
I don't think I'm the one to answer that question, to be honest with you, but to give you my personal perspective on it, and there's an interesting quote. I can't quote it exactly, but it's something along the lines of, as long as there's reality as we know it, this is not a threat. So the opportunity cost of thinking about it and worrying about it, for me, it's not worth it. I'd rather focus on Bitcoin. There's other very intelligent people that are better at expanding it than me, but that's how I view it.
Not the person to ask about
This
quantum
is
computing.
this is an Adam back fireside at this point.
Yeah, definitely. But yeah, I think it's, as far as I understand, it's not in the nearest future. And also, there's a threat, but there's also a defense mechanism.
Yeah, I mean, I think it's not a threat in any eventuality. I think it's not a threat within a couple of decades because they have a lot of R&D to do to make those type of systems practical. I think the pace of progress and the level of benchmarks they can achieve have been exaggerated by a factor of 1 million or more. The benchmark is they can factorize the number 21 like a primary school. 3 times 7 is 21. That's the state of the art, and they had to cheat and cut corners to do it because there's no error correction. So to repeat the same calculation 64,000 times, take the average result, and that's the state of the art approximately. So they've got factors of 1 million in something like half a dozen different vectors of fundamental physics research, scalability, error correction, decoherence time, clock speeds, and manufacturing. There's just so far from reality. It's shocking that we're even having to see the Bitcoin price drop because somebody made an announcement about some quantum physics improvement, incremental improvement. So, and then the other point is, it doesn't mean that we should ignore it. I think it means that we can, add a new signature scheme to Bitcoin that is quantum, post-quantum secure. And it's only a few months ago that NIST added a post-quantum secure signature, right? So before that, there wasn't really a standard you could use. So I think the simple thing for Bitcoin to do is to add that as an optional spend path to a Taproot signature so that you're not paying the cost of these big signatures, but you're ready to do it if it becomes relevant in the future. And then we can stop hearing about quantum stuff for a while.
I can't wait for that. I'm excited for that day. We're getting pretty close to the end. Willy, I want us to close out with something positive, something bullish. How does Bitcoin move from being seen by the vast majority of the population, at least who understand Bitcoin as a store of value, to being not only a store of value, but a medium of exchange and a unit of account? And what's the future of Bitcoin?
In short, just time, realistically. I mean, fundamentally, Bitcoin is actually the best design for money we've had. Gold and silver was an approximation. Bitcoin is it because money's a ledger and it needs to be secure. That's what the scarcity of gold was about. We're securing it on energy, which will pan forward for thousands of years and to infinity because technology is based on energy consumption. So it is the right form. It just is currently, since 1971, we're using a social consensus. We trust the Fed, so to speak, to manage that ledger. We used to trust atoms, which was gold, and now we're going to secure this with a consensus mechanism backed by or secured by energy. And so that is the right form. You know, how long does the world figure this out through the school of hard knocks? I don't know, but I think fiat is coming to a close soon. It's looking pretty unstable. You cannot overspend forever. So it's just a matter of time, and we're at 4.7 worldwide adoption, 4.7%. It's tracking very quickly, so, you know, sit tight, enjoy the ride. All good, you know, so that's it.
Let's go. And so we're running out of time. I know Max has some closing words to say after this, but thank you for having us in Riga. This has been amazing, a great conference, and let's have a big round of applause for the panelists.
Что? Я говорю?